I am Jeremiah Ajuda Dusu, the author of JAD's Business and Financial Accounting. Welcome to class. Okay, we have been on group balance sheet for a while now. So today we are going to begin, that of profit and loss, also called income statement, right? So we are taking that step now. Okay, so it's group okay. Now, of course, you already know what it means to consolidate. Okay, that means you're bringing, two or more different companies, right? You're bringing their financial statements to be one, right? Okay, so that is what we're doing here. Of course, we've done that on balance sheet. We're looking at profit and loss here. Okay, so we're going to start from the very scratch. Of course, if you're consolidating, you're going to have some adjustments, of course, as approved or as deemed fit by the directors. Of course, know that directors are responsible for the financial statement, right? You should know that by now. So when we are consolidating, whatever adjustment that they feel is necessary will be adjusted for. Okay, so we're starting from that point where there are no adjustments, and then we begin to introduce the adjustments one after the other. Okay, so we also try to make the line items a little bit not much, and then we'll start introducing some other line items, right? Okay, so let's just start from that should I call it foundation, or from that little scratch where we just build up until we get what we actually want. So today we're looking at group or consolidated profit and loss account, but here we can just really say without adjustments. Okay, so it's simple. We're just bringing different profit and loss as that of the holding company and that of the subsidiary. I'm trying to make it one. Okay, so of course we already know that A Limited, for instance, is the holding company, or what you call parent company, and then we have B Limited, for instance, call this guy the subsidiary, right? So we have a P and L for this guy, we have a P and L for this guy. So what we're doing here simply is to what? Bring this guy's P and L plus this guy's what? P and L. Okay, that's what we're doing here. Okay, so of course you would agree with me that of course, let's say we have A Limited, and then we have B Limited. Okay, so what do we have here? We have turnover. Okay, you should know that by now. Turnover, you have turnover for A. Okay, you have for what? B. You're going to have cost of sales, right? Cost of sales, you have for A, you have for B. So if you take this out, this is called what? Gross profit. Okay, so what else? You have your expenses. Of course, based on presentation, you can have the expenses, differentiated into maybe marketing and distribution expenses, then administrative expenses. But here we're trying to reduce the line, so let's just make it one. So depending on how you're presenting it, right? Good. So if you have the expenses, you take this out. So this is the profit. Can call this, some call it net profit, some call it, in fact, it's called, let's say, operating profit, or profit for the year. You have this profit for the year. Okay. So you can have other incomes, because that will be added. Okay. Good. Now this is the profit for the year. This and this. Now when you get profit for the year, so it means that on this profit there should be tax, right? So let's put tax. If you have your tax, you take this out. So this is profit after tax, or what you call so this is called profit what afterwards tax, okay, or profit after taxation, okay. So now this is profit that is what attributable to what distribution, or should we say that is meant to be distributed, or that is available for distribution. Okay, so when you have this, then we can appropriate, Abi. Good. So let's just say from this profit now, what do you have now? You can propose dividend, right? Propose dividend. So we propose dividend, you have this. Okay, so this, of course, what we call what? Retained profit for the year, right? So if you have any profit from the previous year, you bring it in, okay? So you say retained profit brought forward, right? How do you see? Retained profit brought forward. You put this here, you have this. So this is the retained profit you're carrying forward to the following year, right? So let's just leave it at this. Let's leave it at this. So the point we're trying to make here is that, of course, we have established the fact that this is the holding company and this is the subsidiary, and this is their profit and loss. Okay, so you want to consolidate. Like I said, there is no adjustment. So basically, your schedule, what you call your consolidation word schedule, okay, is a function of your what? Holding company, your what? And your what? Subsidiary. Then if there's any adjustment, you put adjustment there. Then you now have C, P, and what? M. Okay, but here there are no adjustments. So that means your turnover will be this plus this, will give you this. Cost of sales will be this plus this, giving you this. So you have this, your gross profit. Expenses will be this plus this, giving you this, right? So you have this. Now this is your profit for the year. So tax will be this plus this, giving you this. Take this out. So this is what? Profit after what? Tax. So once you get your profit after tax, okay, you can now go ahead and prepare your what? Consolidated what? Profit and what? Loss. Okay, so let's look at how that would now look like. So from here, you can say what? A Limited and what? Its subsidiary, right? So we have consolidated profit and loss. We have consolidated profit and loss. So that means your turnover will be this. Your cost of sales will be this. So you have this. This is your gross profit. Okay? Your expenses will be what? This. So this will be your what? Profit for the what? For the year. Okay? Now, your tax. You put your tax there. So this is your profit after tax. Okay? So this is your profit after tax. Now, at this point, you know that this profit, okay, is what? Is attributable to both the group company and the what? And the subsidiary. Okay? Now don't forget that this profit after what? Tax of this subsidiary has been included in that consolidation. Now, this profit after tax belongs to both the what? Holding company and the subsidiary. So it means that we now have to take out that of the minority what? Interest. So let's assume that this guy, the holding company, has 80%. So that means minority interest is what? 20%. So the profit after tax of this guy is to be shared between the holding company and what? The subsidiary. Okay? So now this, we have to take out that of minority interest from that what? Because this one here is an element of both the subsidiaries and that of the holding company. But now we want to take out the one that belongs to the minority what? Interest. So we have established that 80% is for holding company, 20% is for minority interest. So that means that what? You're going to take out what? 20% of what now? 20% of this profit after tax of the subsidiary. So if it is 100, so 20% of this, okay, bring it out here. So we say what? Less minority interest. So whatever we have here is profit what? Attributable to what? To the group or to the holding company. Then from this now, you can now what? Appropriate. So group company can now pay its dividend. What dividend of what? The group company, which is this A Limited. You pay your dividend. Okay? You have this. When you less minority interest, this is what you have. This one here is the profit and loss. Then use your proposed dividend. You have this. So this is what you're retaining for the year from the group perspective, right? Then you now say what? Retained profit brought forward. Okay? So what is the retained profit brought forward from the previous year? You come back here. See the retained profit. Now this is that of the holding company, right? So let's say that of the holding company is what? 80. That will be 80 plus that of the subsidiary. Let's say it is what? 30. But remember, when the subsidiary was acquired, there is what? A pre-acquisition reserve or a pre-acquisition profit. So let's assume when it was acquired, there is a pre of 10 naira. Of course, it can be loss. You know, it can be profit or loss. So but let's say there's a profit, that's credit balance. Okay? So there's a pre of 10 naira. So that means that it has grown from 10 naira to what? 30. So if pre is 10, post is what? 20. So that means it will be 80 plus what? Plus 20. But this 20, it has to be what? 80% of it, right? So that will be 20 times what? 0.8. So what's the 80% of 20? What's the 80% of 20? 0.8 times 20. That's 16. That will be so it will be 80 plus what? 16. That's 90 what? 6. So that will be the what? Retained profit brought what? Forward. Okay? That is the retained profit brought forward of the holding company plus the percentage holdings of the what? Post-acquisition profit of the what? Subsidiary. Now I know here this is a credit. Assuming it's a loss. Assuming this is a loss. Here now it's a credit, it means it's a profit. Assuming it's a debit, which is a loss, it will mean that the post-acquisition profit would have been what? 40. For it to have reduced, accommodated the loss to bring it up to 30. But because it's a profit, I was saying 30 minus 10. But if it were to be a loss, it would be 10 plus 30. Okay? So let's go back now. It's a profit credit. So that means it will be 30 minus what? 10 to give us the post. So the post that we have 80% of it. Alright, so we put that one here. So this will now be a what? Retained profit carried forward. Okay? So what we have actually done here is to look at what? Consolidated what? Profit and loss. Okay? Where there is no adjustment at all. So that means the directors are not having any adjustment to be done in the book. So it's a free flow. And then we did not populate it with so many line items. But as we proceed, we'll be introducing adjustments and some other line items. So I don't want us to rush into it. Let's just go gradually like that. Okay? So take your time, play with this. Okay, if you have questions, you can drop them in the comment section, or you can get me via the numbers displayed for clarifications. Okay, so let's take a very straightforward question so we understand what we're talking about here. Okay, let's take this very straightforward question so we understand what we're talking about. Remember, no adjustment, just straight consolidation without adjustment. So let's go. So we have the following represents the income statement of Kings PLC and Queens PLC as at 2018. So we have all the turnover, cost of sales, gross profit, other income. We have the gross income, total expenses, profit before tax, taxation. And then we have proposed dividend there. Then retained profit for the year, retained profit brought forward, retained profit carried forward. So they said Kings PLC acquired 80% shares in Queens PLC on 2000 when its profit was 1050 million debit. Okay, there's a loss there. So there are no adjustments deemed necessary by the directors for the companies. Okay, said you are required to prepare consolidation schedule and consolidated income statement for the year ended 2018. Okay, so let's quickly look at this. So let's go. We have consolidation schedule. So we're going to have Kings, we have Queens, adjustments C, P, and L. Remember, there are no adjustments anyway. Okay, so what do we have? We have turnover for Kings. What do you have for Kings there? 15 million. Okay. So this is 15 million. Queens 10,500. There are no adjustments. So this plus this will give you what? This is 25,500. Can we check in here? Okay, 15,000 plus 10, 500, 25, 500. So let's go. Cost of sales. What do you have? 9, 500. What do we have here? 6, 200. No adjustment. So this plus this. What do we have there? 9, 500 plus 6, 200. 15, 700. So what do we have? This minus this. I think we can get that from the question. That's 500. Okay, this is gross profit. This guy can get it there too. 4,300. So this will give us what? 25,500 minus 15,700 is 9,800. So what else do we have there? We have other income. Other income 2,850. What do we have here? 1,250. No adjustment. So this plus this. Two 850 plus 1,250. This is 4,100. So this is, I can call it operating profit or gross income. So what do we have here? They used gross income here. $8,350. $5,500. Of course, that's the addition of this and this. Then this will be what? $9,800 plus 4,100. This is 13,900. Okay, so we have expenses. Now the expenses there. Expenses there we have 4,050. $2,150. So we have 8,350 plus 4,050. Excuse me, please. 4,050 plus 2,150. That's 6,200. So this, and this. So we can get this from there. This is 4,300. This is 3,400. So what do you have here? 13,900 minus 6,200. This is 7,700. So this is profit before tax, right? Then we have taxation there to be 1376. 1376. This guy here is 1088. No adjustment. So this plus this. One three seven six plus 1088. 2464. So we can get this from the question, right? 2924. Then we have 2312. Okay, so this minus this. Seven hundred minus 2464. We have 5236. So this is profits after tax. So at this level, we can prepare the consolidated profit and loss account. So what we've done here is just to prepare the consolidation schedule based on the information provided. Okay, so you can have all this in the question. So there are no adjustments. So it's just mere summation of what we have to get what CP and what L. So from this point, you can go ahead and prepare the consolidated profit and loss. Okay, so let's go. So we'll say what Kings and it's what subsidiary. So we'll say consolidated profit and loss account, right? For the year ended 31st December 2018. Okay, so let's go. So we say turnover. What's the turnover? 25,500. Cost of, so what's the cost of sales? 15,700. So when you take that out, what do you have? 9,800. So this is what gross profit. So we have what other income. What's the other income? 4,100. So this 9,800 plus 4,100, 13,900. So this is the gross income. Like I said, it's presentation. And use operating income there. Then what do we have? Expenses. The expenses here we have 6,200. Take that out. What do we have? 7,700. So this is what? Profit before tax. Then what's our tax? Based on the question, we have 2,464. Take that out. What do you have? 5,236. So this is what? Profit after what? Tax, which is also, available for what? Distribution. Now, this profit is attributable to the group and the subsidiary. Okay? But don't forget, there is minority interest. So we want to know what the minority interest. So they said that what? Kings acquired 80% shares in Queens on 2016. So it is Kings 80%. Minority interest will be what? 20%, right? So that means that if you look at the profit after tax of the subsidiary, okay, based on the information provided, the profit after tax of the subsidiary, can you see here? This 2312 here belongs to the holding company and the minority interest, and it is already forming part of this. So we want to know how much of this belongs to the minority interest. Of course, that will be 20% of this, right? So minority interest will be 20 over 100 times 2312. So what do we have? So we say 0.2 times 2312. We have 462.4. 462.4. So let's take that out. Again, let me explain that. Kings acquired 80% in Queens. So that means 20% is for minority interest. This profit after tax here, which is available for distribution, belongs to both the holding company and the minority interest. So we're taking out that of the minority interest. How we're doing now? So we'll say less, okay, less minority interest. That's the 462.4. So we have that now. So we'll take that out. What do we have? 5236 minus 462. That's 4773.6. So we have 4773.6. So this is what? Profit attributable to the group. Okay. Now that means the group has this to share to its what? Stakeholders. So the group, we have to what? Pay dividend. So what is the dividend of what? The group. Go to what information. You know the group here is 1170. So we have proposed what? Dividend. 1170. So we take that out. What do we have? 1170. Okay, we have 3603.6. 3603.6. So this is what? Retained profit for the what? Yeah. This. So we now say what? Retained profit brought forward. So what is the retained profit brought forward? What is the retained profit brought forward? So if you look at the question, you will see the retained profit of so we'll say retained profit of what? Holding company. Look at the question. What do we have? Retained profit of the holding company that has been brought forward. What's the question saying? 3120. 3120. So retained profit of what? Subsidiary. Now remember, there is a pre-acquisition profit, which question says is a debit. That means there's a loss. Then, but as when we are consolidating, the retained profit carry forward is 2010. So that means there's a profit that has been made that covers the loss. So that of the sub will be what? 2010 plus 1050. Okay, because there was a loss as when they acquired it, but by the time we consider it, that's turned to what? Profit. That means what they made was able to what? Accommodate or absorb the loss to get to this position. So the actual post-acquisition what profit will be what you have here plus the loss. Okay, so what do we have here? 2010 plus the loss of 1050, right? So what do you have? 3060. Yeah, 2010 plus 1050. So we have 3060. So this is 3060. Then multiplied by what is the percentage holding? That's 80% of 0.18. So what do you have? $2,448. So that'll be 2448. So when you add up this, $3,120 plus 2448, we have 4896. So that'll be 4896. So when you add up plus 3603.6. So we have 8499.6. So this is the retained profit carry forward to the following year. Okay. So what we've done here is simple. Prepare consolidated what? Profit and loss based on information we were given. Okay. I think the basic, point of note here is the minority interest aspect of what? The profit after tax of the subsidiary, and then the retained profit brought forward. Then I've shown how we got it here. This was a loss. So when we were reporting, we had this. So that means that what we got was enough to absorb this. Before we got this, that's how we got 306. So 80% of it, according to what we call the post-acquisition profit, right? So 80% of this what we call is this. So we add this to that of the holding company, we have 489, 84, the 4896. When you add this 4896 to 3603, that was 8499.6. Okay, so this is a consolidated what profit, and of course no adjustments yet. So as we move on, or as we continue the class, we'll start introducing some adjustments and some other line items. Okay, so take your time, go through this one, play with it. So see you next class for what an upgrade version of of consolidated P and L. So keep moving like that. Okay, so don't forget you can support us by printing account numbers displayed or sponsor copies of my textbook for free distribution to students. Thank you and see you next class. Bye bye.